Term versus whole life insurance. The first lasts a set number of years, the second for your whole life. Two of the oldest varieties of life insurance, term and whole life, remains among the most popular types. What's the difference between term and whole life, and which one is better for your needs? Key takeaways. Term life is pure insurance, whereas whole life adds a cash value component that you can tap during your lifetime. Term coverage only protects you for a limited number of years, while whole life provides lifelong protection. If you can keep up with the premium payments, whole life premium can cost 5 to 15 times more than term policies with the same death benefits. So they may not be an option for budget-conscious consumers. Term life insurance is perhaps the easiest to understand because it's straightforward insurance without the bells and whistles. The only person to buy a term policy is because of the promise of a death benefit for your beneficiary should you pass away while it's in force. As the name suggests, this stripped-down form of insurance is only good for a certain period of time. Whatever it's 5 years, 20 years, or 30 years, after that the policy simply expires. Benefits of term life insurance. Because of these two attributes, simplicity and finite duration, term policies also tend to be the cheapest, often by a wide margin. If you all seek from a life insurance policy is the ability to protect your family when you die. Term is likely the best fit. While no two families are exactly the same, new parents sometimes purchase insurance that lasts just long enough for their kids to finish college and join the workforce full-time. According to the online brokerage Policy Genius, the average 30-year-old male can get a 20-year term policy with a $500,000 death benefit for $28.73 a month. Because of her typically longer lifespan, the average 30-year-old woman can also purchase the same policy for just $23.02. Drawbacks. A variety of factors will change those prices, of course. For example, a larger death benefit or longer length of coverage will certainly increase the premiums. Also, most policies require a medical exam, so any health complications could raise your rates above the norms as well. Pros. Generally, term insurance has a much lower cost than other type of life insurance. It's simpler to understand than permanent policies. Cons. Protection is only available for the term of the policy. It cannot be used as a wealth building or tax planning strategy. Whole life insurance. Whole life is a form of permanent life insurance which differs from the term insurance in two key ways. For one, it never expires as long as you keep making your premium payments. It also provides some cash value in addition to the death benefit, which can be a source of fund for future needs. Benefits. Most whole life policies are level premium, meaning that you pay the same monthly rate for the duration of the policy. Those premiums are split into two ways. One part of your payment goes to the insurance component, while the other part helps build your cash value, which grows over time. Many providers offer a guaranteed interest rate, often 1% to 2% annually, although some companies participating policies which pay unguaranteed dividends that can increase your total return. Drawbacks. Unfortunately, the death benefits and cash values aren't completely separate features. If you take a loan from your policy, your death benefits will go down by a corresponding amount if you don't pay it back. If you take out a $50,000 loan, for instance, your beneficiaries will get $50,000 less, plus an interest due if the loan is still outstanding. Another potential drawback of whole life insurance is its complexity. Within a term policy, for example, you can simply stop making payments if you no longer need the insurance and can no longer afford it. However, depending on your carrier, whole life policyholders may face a surrender charge of up to 10% of the cash value if they decide to walk away from their policy. Usually this charge reduces as the year goes by until it finally disappears. Pros. With whole life insurance, you have the ability to borrow against the policy for future financial needs. Loans like death benefits are generally tax-free. You can lock in your premiums for life. Cons. Whole life insurance is much pricier than comparable term policies. If you have to let the policy lapse within the first few years, you could face surrender charges. Any outstanding loan will reduce your death benefits. Choosing your coverage. So which type of coverage is best for your family? If term coverage is all you can afford, then answer is simple. Basic protection is better than no protection at all. Conclusion: whole life insurance certainly offers more financial flexibility with its cash value component. Nevertheless, because permanent policies are more complex and expensive, a lot of consumers follow the old axiom: buy term and invest the rest.